Good morning. It is almost 9 UTC, like 5 minutes 9 UTC on the last trading day of August, Friday the 30th. Yes, the August goes to the 31st, so crypto is going to close Saturday night. That'll be the monthly open Sunday morning. So keep that in mind. We're getting into the last month of Q3. Looking at the local stuff here, we've got CPI data from the Eurozone coming in a couple minutes. Biggest things here, again, PCE data year on year and month on month coming in an hour before the New York Stock Exchange opens. Uh, just an outlook, so expect a little bit of volatility pre-market going into the market open. Then next week, remember, Monday is Labor Day, so it is going to be a holiday for the U.S. markets. Expect a drop in volatility. That does not mean a drop in volume. That does not mean that volatility is going to decrease. There could be lower volatility moves that are pretty significant on these types of days, but just keep that in mind. Some decent amounts of data, most of it coming in on Thursday. Quite a bit of different non-farm payrolls, initial jobless claims, that type of stuff, going to be specific to the U.S. markets. Looking over at Bitcoin specifically, so we did have that grindy up structure, which was nice. Hit a nice point around 5:30. What was that? 3:30 UTC. Uh, Beautiful swing fail, nice little swing fail, broke the upside structure, lower time frame, flushed back down on that local liquidity. 58K still seems to be holding quite well. However, we have started to build up quite a bit of local longs all the way down to 57K. So if there is any localized failures here, you would probably start expecting a sweep lower, as there is now enough local liquidity to force a 57K retest. Now, that being said, the upside drive was strong. We've got a ton of high leverage liquidity building right above the local high at 61.2. So if we could start creating some higher lows from where we are now, regaining 59.5 and then 60K, that's not a bad target, especially given that there's quite a bit of short liquidity that takes us not just to 62K, but potentially higher to 63.5, which are two major levels that we're keeping an eye on. But for the time being, you're kind of flagging out, ranging in this kind of like crabby price action structure, sort of looking decent with some low volume stuff pumping into some higher volume that eventually broke down yesterday. So for the time being, you're in a localized range. You have failed the local high, so we'll keep that in mind looking at the TA. Long short ratios here. Still not great, not terrible. A lot of taker longs in this zone. The thing that worries me still, because I haven't looked at this in a while, long short ratios are still relatively high, over 2 to 1 long to short. So as long as that's in place, the priority can't be a massive continuation up. I would want to see this starting to drop. So significant changes as far as where we were from the 25th, obviously, where we were actually more short than long, which coincided with a continuation move up. Now we're seeing the opposite with quite a bit of long stepping in, which makes the downside more attractive. Looking over at trading light to kind of give perspective of where we are. Yeah, open interest still kind of middling at best, still has come down quite a bit. Longs were liquidated yesterday and today. Some new key levels were created. Obviously, any failures that start to close under 58.6, I would argue that that's probably a push down to 57K. Grab that high leverage liquidity that we saw building on the liquidation heat map. The local gain that really matters is the local high. This is a big, massive bearish engulfing 4-hour candle, 67.50. That gain there should force a retest at 62K. Until then, you're kind of in the localized range. There's a nice failure if we come up and just swing that back to the downside, potentially break stuff. But again, you're middling, you're in this range, and the higher time frames just look less attractive to trade. On the heat map side, you've got some stuff stacking above 62K locally. There's not a whole lot. There's some, smaller orders holding price, but the main stuff is that we pulled stuff here below us. A good friend of mine on Twitter at ZenCoiner pointed out in his little market update this morning as well that these things were pulled yesterday, and in the same time period, we saw seeing massive moves back to the downside. So the fact that they're pulling long order books and it's quite open below us is not really the best sign. Simultaneously, we have good little pockets of shorts building above us from above 60.7, 61.4, all the way up to 62K. And then we have some higher stuff above that towards 65K, all putting downside pressure with the book stacked above us. Looking at some local things, just to give perspective on the TPO. Yeah, or excuse me, on the order flow currently, there's quite a bit of shorts right here that could easily fuel an upside move. We've got a little bit of priority up, which is nice to see. So all of these shorts here, mostly unpunished, we could easily go back towards the high structure at 60.750. We want to see some lower gains here locally to get us a retest higher. But for the time being, there's also enough longs building with the previous the previous 4 hour period, which was a pretty decent delta. Watch this failure. Like I would put an alert right there, 68,579, 68, call it 68.6. If we do start pushing that really hard, likely to sweep into that downside liquidity. Finally, just hourly TPO here. They're all stacking in the same place. So as long as we're holding above this, it doesn't look too terrible. 59K. We want to see some gains lower time frame. The lower time frame resistance at 59.5. That's the first like lower time frame gain that should get us to test 60.3 and then 67.50. That's really where we want to kind of see a target either as a failure or a gain for continuation. But for the time being, you're in a range. It's a pretty nasty one. It's a tight one, but it's still enough to take out, 100x, 50x, I think even 40x liquidations in the last couple days. So keep that in mind. Looking over at Trading View. So first off, just kind of looking at that kind of liquidity stuff. We've got some nice pockets above us. This actually was already taken. The big stuff, or actually wasn't taken. So that's the local stuff we're interested in. If there's a localized failure at 60.7, 60.750, if we just have that swing move up into that structure and then fail back down. Above that, we've got high leverage stuff going to 62K. The flip at 62K actually starts to regain some priority and likely to test past this liquidity dead zone if we can get above it. Now, this liquidity dead zone just means that there's not a whole lot of liquidity there that would force a retest, at previous low structure at 63.5. If we don't get some more leverage liquidity built in that zone, there's just not enough fuel to go higher. The heavy short liquidity is still in place above 64K now with that kind of like crab down that we did earlier in the week. So that's definitely still in place. We could play out a larger flag structure, but any breaks of this, any breaks of 58K, likely to get a sweep down into that lower leverage liquidity, potentially even retesting 55K. So keep in mind, we're in the range. We've broken back down from basically this high structure here back into the previous range structure, which is below us, right? So basically this stuff. So just keep that in mind. You have lost the top range back into this middling range. Looking over at the general price action for this zone. Let's let that load. So, big stuff here that we care about. A localized gain, like I said, 59.5. That's the local gain that should get a retest back at the highs. There's a lot of 1 hour resistance there as well, as we can see in these kind of purple zones. That's just a supply zone. The gaining of that high should see us retesting 62K pretty effectively. And if we do happen to break down, again, failing 61.4, that previous range high should force us back lower. So easy mode here, 59.5K. That's the local gain. That's an alertable level. That's really important. Next one is going to be at the local high structure. So call it 60.7, 60.6. This May level effectively. That's where we want to see some kind of a reaction point, and then obviously 62K. So from those, and then finally, I guess a fourth level to kind of keep an eye on is 58.3, but realistically it's 58K. The losing of this support here would force 57K at the very least, potentially even lower if there's that further breakdown. So the time being, you're in a range. It's kind of crabby price action, not super clean. We nuked off that can potentially upside move yesterday, and longs are still dominating the books. So overall, not overly bullish here. I just don't see it. Not until we start regaining stuff. The regains that start to matter, anything that starts regaining, like this stuff here, is a potential squeeze back up to 63.5. But until that happens, you're in a crab nasty range. So trade trade sparingly and probably reduce position size until we get some trending direction. So that's that. Take it easy and catch you guys Monday, which, as a reminder, is a holiday in the US. So no trading there. Peace.